Which retirement plan is better? Last week, we talked about the SEP IRA. The week before, we covered the solo 401k. So here's the question I get all the time. Which one is actually better? The answer isn't as straightforward as you may think because choosing the wrong retirement plan could cost you valuable tax savings. Today, we're comparing the solo 401k and the SEP IRA side by side so you can better understand which retirement plan may be the better fit for your business. Hi, I'm Lisa Marie Odeja, CPA, EA, former federal government auditor, and an advanced tax strategist at Pinnacle Financial Services, where I help real estate investors, my firm's primary focus, and select profitable business owners legally reduce taxes through proactive tax planning so they can keep more of what they earn. Let's dive in. So, who can use them? Let's start with eligibility. A SEP IRA is available to many self-employed individuals and small business owners. A solo 401k, however, is generally designed for business owners with no full-time employees other than a spouse. If your business has employees, or if you expect to hire them soon, that alone may influence which retirement plan makes the most sense. One mistake I see business owners make is choosing a retirement plan based only on what their business is today. Your hiring plans over the next few years may be just as important as your current situation. Now, let's look at contribution potential because this is where many business owners pay the closest attention. Both plans allow significant retirement contributions. However, depending on your income and your business structure, a solo 401k often allows larger contributions because it lets you contribute both as an employer and the employee, and that can create additional tax planning opportunities. But higher contribution limits don't automatically make one plan better. The real question is whether you're able or if you actually want to contribute that much based on your cash flow, your business needs, and your long-term financial goals. Now, let's talk about simplicity. If simplicity is your highest priority, the SEP IRA generally has the advantage. It's relatively easy to establish and administer. A solo 401k usually requires a little more administration, especially as your account grows. So, some business owners choose simplicity because it saves time. Others are willing to accept a little more administration if it creates significantly greater tax planning opportunities. And that's the trade-off worth evaluating. Employees, here's where two plans really begin to differ. This is one of the biggest differences. With the SEP IRA, if you have eligible employees, you're generally required to contribute the same percentage for them that you contribute for yourself. Now, with the solo 401k, the rules are a little different because it's intended primarily for owner-only businesses. And this is one area where decisions made today can affect future payroll costs. That's why it's important to think beyond this year's tax return and consider where your business is headed over the next several years. Finally, let's talk about flexibility. Both plans offer flexibility. A SEP IRA allows you to adjust contributions based on your cash flow from year to year. A solo 401k, however, may provide additional planning flexibility depending on your income and your long-term retirement goals. The best retirement plan is the one that still makes sense as your income, your business, and your personal goals evolve over time. Now, everything we've discussed today is intentionally high level. Retirement plans are full of nuances, exceptions, contribution rules, income limitations, and long-term planning considerations. And that's why choosing the right retirement plan shouldn't be based on a YouTube video or even a simple feature comparison. It should be based on your specific business, your income, your future plans, and your overall tax strategy. After watching comparisons like this, many business owners naturally ask, which retirement plan is the best? But that's actually the wrong question. The better question is, which retirement is the best for my business, your income, your business structure, whether you have employees, your future hiring plans, your retirement goals, your overall tax strategy, and all of those factors matter. So, which retirement plan wins? The truth is, neither one automatically wins. A solo 401k may be the better choice for one business owner. A SEP IRA may be the better choice for another. The right retirement plan isn't determined by a checklist. It's determined by how all the moving pieces fit together. That's why retirement plans should never be a last-minute decision made during the tax season. It should be part of a proactive tax strategy. If you'd like to determine whether a solo 401k, a SEP IRA, or another retirement plan is the best fit for your business, I'd be glad to help. Simply schedule an initial consultation using the link below or scanning the QR code on your screen. And during that initial consultation, we'll discuss your goals, your current situation, and how my firm works. From there, we'll determine whether we're a good fit to work together, and if we are, we'll discuss the next steps. If you found this video helpful, please like, subscribe, comment, and share it with another real estate investor or business owner who could benefit from this information. Remember, the goal isn't simply to pay less tax. The best tax strategies aren't just effective, they're defensible. Because at the end of the day, it's not what you can take, it's what you can defend. Thanks for watching, and I'll see you in the next video.